Good morning, ladies and gentlemen. Welcome on our presentation of 2017 results. Today with us we have Niklas Lindberg, Echo Investment CEO, and Maciej Drozd, our CFO, and they will deliver the presentation for you. If you have any question during the presentation, just ask them. And of course, at the end of the presentation, we'll have the Q&A session.
Good morning, everybody, and welcome to the presentation of Echo Investment's year-end results for 2017. We will start the agenda as follows. We will do the highlights, we will do the market, how we see the market, a business review segment by segment, and then we'll get the financials, and then we'll talk about our values and how important that is for our company. And after that, there will be the appendixes that you can look through with all the data about ongoing projects that we have in the pipeline. This is the first year of Echo Investment where we are doing 12 months as a pure developer, which is a really important step for the company. We have now transformed from being a mix of a developer and an asset holder to being a pure developer. We also made last year a net profit of 312 million zlotys, which is really 0.76 PLN per share. And this is really a figure that we are impressed and very happy with going forward. Dividend per share we paid out was 65 groszy, and we also are saying here that according to our dividend policy, we will propose to the board that pay out 50 groszy per share for 2017 that will be payable now in 2018. The company is very healthy going forward. We have a low net debt, we have stable financing in place, we also have multiple projects added onto the land bank, we have stable financing on ongoing projects. This is really looking good going forward for Echo Investments. What we see forward for 2018, we see a strong market. We see the market is really strong for 2018. We see that there's no forecasted increased rates of the exchange rates. We see that it's interesting to look at. We have seen increases on the construction market. We will dig into that later on in the presentation of the benefits of Echo Investment having our internal construction division that are dividing it into packages. This increase in the construction has been able to be absorbed by increased sales prices or decreased in yields going forward. So this is nothing that we see today as a big threat. We are keeping it under control, we are monitoring, and I will go into that later on during the presentation. We see both in our office, residential and retail project a high pre-sale or pre-lease rate. This is keeping us confident going forward in our business. We also see in all the different markets we're being present, especially in the office, that the vacancy rates are decreasing. This is the 5 pillars of Echo. We're only doing Poland, which is now we have transformed by selling off a lot of the assets outside of Poland, only to be able to focus purely on Poland. We are a Polish developer. We are having the leadership position. You see it in retail, we see it in offices. We also see it in residential, where we now are up on the 9th place of the biggest developers. But what's interesting here, if we would sell 30 apartments more, we would be in place number 6. So it's really a massive step that we're taking forward. We still have the same target in place that by 2020, we're going to be able to deliver 2,000 apartments to the market. We are also focusing on what we said before, the pure developer. We are developing, and as soon as we hit a pre-sale rate and the product are at developed that we can sell it further on, we will sell it further on to accumulate the maximum value for the company. Partnerships. This is crucial for us, like I mentioned in earlier presentations, when we come into our retail business, but also part of our office business where we do pre-sales, and also, but mainly in retail, because here we tie up most of our equity. And that's why it's so important for us to get in a partner to be able to turn around the capital much quicker than we otherwise will be able to do. And destinations, like the Warsaw Brewery, what a beautiful project. And you will see it already now. We have started 3 residential phases. They're all pre-sold. You look at our first office building. If you go back if you move forward a month or 2, it will also be fully pre-let, which is really showing what kind of interest there are for destination projects like this. And this is something that we're going to push forward both in Warsaw but also out in the regional cities. We believe this is the future for the Polish market, and we've seen it from international markets where the same phenomenon has been happening. This results in what we said before. We turn around the capital quicker. We got a clear focus, what we're doing, what we're not doing, better returns, better execution. So this is something that is really benefit our company. A lot of us has looked into what's important when you're growing a company. You need also to keep under control your cost levels. And I think this slide is highly crucial for you to look at. 2017 versus 2016, we increased from 680,000 square meters in pipeline to 1.1 million. But what's really interesting here, and my pointer is not working, our G&A cost was 121 million PLN in 16, 114 in 17. So we've been able to decrease the factual amount of overheads between 2 years at the same time as we've been growing our land bank and the projects under construction with up to 40%. This is really, really a good figure to look at. And what's interesting to see here as well, we kept the same profit margin out on our projects. So this is really a clear signal that our profitable growth strategy is working and is being implemented. In Q4 was a busy quarter for us. A lot of the business is happening in Q4. You see here we turned around and sold 531 apartments. We handed over 610 units. This was a really, really busy month for our residential apartment. This is roughly 50% or 60% of all the units we handed over last year, we handed over in Q4, which is really showing how important the last quarter is for our business as we complete a lot of projects. We sold 2 office buildings in December as well, amounting up to close to 100 million euros. This is really showing that there is a strong demand for our products. You see it also in our residential part, where we continue growing also now in the first quarter of 2018. To give you a little bit of a hint what's coming ahead of us, what you see here, all the projects that are marked in green, is a project that we're going to sell in 2018, but we have already signed a binding agreement with the final buyer. And here is Symmetris with EPP, Westlink with GPRE, O3 with EPP, Sagittarius with HIH. And then we're going to put also this year 2 new buildings on the market. Galleria Libero in Katowice, a building that is going to complete now in August, where the first tenants are moving into the building and the center is opening up. Already now above 90% pre-leased. There's really a big interest for this kind of new destination projects, where you see that Galleria Libero is so much more than a traditional retail center. There's so much food, there's entertainment, there's a lot of things around that center that will really make it a landmark project in Katowice. Then you have the first building on Brewery J, where we have announced that L'Oréal is taking their new headquarters and moving into that building. Later on, going forward in the coming month, we're going to announce more tenants moving into that building, and then by year end, we are looking into disposing this building. This is really showing how quick we turn around our capital, what kind of interest there are for our product, and how important it is for us as a company to continue starting up new buildings to be able to drive the profitable growth strategy. Here you see the destination project that has been started up this year. You see the Warsaw Brewery. We have started up 15,000 square meters. There's another 38,000 square meters that is about to be started up of offices. This is 2 more phases that's going to be started up during this year. Residential, we have another building that's going to be started up during this year. The rest of the buildings are already started up, the Resi for Rent building and the 3 phases of the Resi for Sale buildings. You have Moje Mieszkie in also here in Warsaw, 2 office buildings and 1 residential buildings, where we also see a big interest both from the residential but also from the office tenants to move into this kind of mixed-use buildings. Future destinations that will come next year or the years ahead of us. You see Krakow Vita next to the railway station in Krakow. A fantastic location, more than 5 hectares that we're buying close to the city center of Krakow. And we're doing this mix here between offices, between residential, between resi for rent, between student housing, is really going to be new Warsaw Brewery, but moving out to the regional cities. So here you see we buy huge part of the cities and we really transform them into multi-use functions. And this is what's unique about Echo. There's no other developer on the market who can continue doing this and really showing that we have all these competencies in-house. You have Łódź Tymieszczego, another location of a couple hectares in woods. We have a lot of historical buildings. There's going to be residential, there's going to be resi for rent, there's going to be offices, there's going to be retail. Really what we're showing here that we can really drive that forward. Then you have Warsaw, Towarowa 22. We showed a big wooden maqueta that really showed what we have done there and how we are thinking about this. There's been a misunderstanding that this should be another retail center. This is not another retail center. This is a 180,000 square meters of mixed-use destination. There's going to be prime cinemas, there's going to be theaters, there's going to be residentials, there's going to be offices, there's going to be hotels, there's going to be residential for rent. This is really that we are not building another shopping center. We are moving the city center towards Walla. This is going to be something that everybody will come and look at, and this is going to be the next step we're doing after the Warsaw Brewery. We're going to do a square here that's going to be 1 hectare. This is really giving part of the city back to Warsaw. This is really something that we are really thrilled about and really looking forward how we're going to do this. And you see here, it's going to consist of multiple streets in between the different areas here. And we are now also putting on board one of the most well-known architects in the world to help us to develop this area. So this is going to be an icon project, not only in Warsaw, but also for the whole of Poland. How do we see the market for our offices? We see a very strong market, both in Warsaw, and if you look at the Warsaw market, we both see yield compression, but also we see rental growth for the first time in a very long period. You see a lot of BPOs coming into the Warsaw market. So we see that there is a lot of supply coming here, but the demand is even higher than the supply is today. If you look at the Warsaw Brewery and the other project we have ongoing, we really see tenants looking for that kind of space and really are looking forward to sign up for new leases here. You see also in the regional cities, in Wrocław, we are fully leased in all the buildings we have ongoing. We see in Krakow, we are leasing up the buildings as soon as they get off the ground. We see all over the regional cities. So looking at our pipeline in offices, a lot of our offices are pre-leased and pre-sold. Going forward now, this is a year where we really need to start up new projects going forward to be able to meet future demands. And that we have done by having a lot of projects ready to be started, but we also have, but later on will come in, increased our land bank dramatically through the year to be able to continue growing the company going forward. Here you see that 2017, we signed a lot of leasing space in all of our buildings around, but it's really helping us to the slide before that we sell our buildings so early. Because then we have given all the contribution and we have also given all the value to the buildings, and that is the time for Echo to enter an agreement to sell the building and then recycle the money and invest it into the next building. Here you see the project we started up in 17. It was only 2 projects. Looking forward for 18, we have another 6 projects to be started up. Which really shows how we're growing the business and how much we believe in the demand out in the regional cities. And a lot of these buildings we're having here, we already now see a lot of demands for future tenants looking at the space here. So looking at 17, it was a great year for our office department. 18, we hope we're going to be even better and going forward by starting up much more projects than we did this year. Land acquisitions. What you will see here, this is only for what we have acquired for offices of 2017 of close to 240,000 square meters of GLA. In total, we acquired up to 400,000 square meters of land throughout this year, 2017. Look, for 18, if you only see in Q1, we have already acquired another 50,000 square meters. So we are really continuous buying. We're buying at the same levels as we have bought at the historical levels of land. This is crucial for us because this is the fuel for the future growth of the company. Retail. Retail is one of the pillars of Echo, where we go in with partnerships, like we did in Mushini, where we invested 30% and we had a development agreement. EPP invested 70%, Towarowa 22% in the same area. This is the ability for Echo to go into this area with limited equity, but still having a profit in the end and having a development agreement that we get cash as long as we go on with the construction. What we see here is what we are looking a lot in. How can we increase the amount of entertainment, food, and also the other things around? Because we are looking a lot, how is the transforming of the food, entertainment, and leisure part of the centers versus the history until today, where we see the figures are growing from 5% up to 25% of the center. And that's what you're going to see both in Libero, you're going to see it also in Mushini, and you're going to also see it in Towarowa 22. That's going to be totally different functions in all these centers. If you look at where we have our projects ongoing, that is in Warsaw and in Upper Silesia, that's the two markets that are undersupplied with retail. So both of the markets where we're being present is the one who has the lowest retail exposure in Poland. If you look back to 2017, we completed some of the deals that was already pending as of the big deal of EPP in 2016. Here we completed both Galaxy, which is a fantastic center in Szczecin. Really a beautiful center, but we really upgraded that to the best center in Szczecin. And also if you look at the outlets in Szczecin are beautiful. Both these things here we delivered fully leased and with NOIs that was above the expectation, which resulted that we got another 18.5 million euros on top of it as an additional payment to Echo, as a top-up payment after completion of the two centers. Libero. You see in front of Libero here, the beautiful square we're going to do. That's going to be full of food trucks and other things that is really making sure that this is going to be a live area of the cities and being a live destination. You will also see the top floor that is full of cinemas, bowling, entertainment, gastronomy. So we are really changing the way that you historically looked at shopping centers until the way we're looking at it today. It's 90% leased at year end. We continue leasing it up now month by month. The grand opening will be in Q3. And we have a rent level that is better than we have expected. We were before around 9 million euros in NOI. You will see now that we're up to 9.3 to 9.4. You see 30% of the space here is food and entertainment, which is really showing that we increase our NOI, but still we have put also a lot of focus to the future trends of retail. Here's the Galleria Mushini. What you see the picture here is the roof of Galleria Mushini. We're going to do like a full garden outside on top of the roof of Galleria Mushini. We're going to really making sure that this whole area is going to be full of gastronomy, bars, entertainment, cinemas, bowling. This is next to the park and ride. This is going to be a fantastic shopping. And having this kind of area on top of the center will really make it different from any other centers that we have seen in Warsaw. We are already now up around above 70% leased. By year end, we're going to be between 90 to 95% leased. And the tenants that we're getting into this center is really the top of the line tenants. This is really something that I'm looking forward to the day it will open up. This will be really a new way of looking at shopping for Warsaw. Here you see Towarowa 22. This is a mock-up that we did, and we showed now at MIPIM for the first time. This is to show this is not another shopping center. This is an integrated part of Warsaw. This is not another high-rise building. This is a human scale building. This is not 105,000 square meters of another retail center. This is 180,000 square meters of a destination. So there's really a lot of differences here. And what you will see here, this is much closer to Warsaw Brewery and other centers, but with a much bigger retail component. And it's not retail in the way you look at retail with a lot of shops. There will be shops, there will be the flagship shops, but there will be a huge part of food, entertainment, and leisure. There's going to be a big square that's going to have more similarities to Manufactura and Woods than any other things. So this will be really something that we are taking all the best international experts to make sure that we can deliver a flagship product to the market in Warsaw. Residential. This has been our business line that we've been focusing a lot on. We see a great potential to continue growing in residential. You see how we've been started from being a very small residential developer up till where we are today, when we are in the top 10. But we are not happy being number 9. We want to come up to one of the leading developers on this market. But we are not going to do that by sacrificing profit margins. We're going to still keep our profit margins and continue growing our business in a successful way. Here you see how we've been growing. And you see it really shows that we have some kind of lag when we're looking at the about final apartment that we're handing over. But you see we're constantly growing on the top line. For 2018, we say we're going to go slightly above the apartments handed over. We have 1,500 apartments, and 1,000 units going to be handed over this year as well, as same as last year. But going forward after that, you're going to see the hike when we continue handing over the apartments that were sold in earlier years. Because there's always a lag with construction until we sell them, until we be able to hand over the apartments to the tenants. And what you will see here, we recognize all the profit at the day when we hand over the keys to the apartments. And you see here in January, February, we have already sold 250 apartments. This is way above any earlier years, what you can see what we have sold off. And we continue handing over apartment in a good pace. This is one of the business where we see really we can grow. And we can continue growing in a very successful way with our destination projects. Here you see what will happen in 2017 and what we're looking forward in 2018. We're going to start up a lot of new projects. We're also going to look at the rental platform going forward, and we're starting a project as well. This is important for us. Create areas that are really alive. Create things that are different and really showing what we can deliver to the market. Residential, we have set a target by 2020. We're going to deliver 2,000 apartments. We are still bullish that we're going to hit that target. Here you see what I talked about before. The land bank is the fuel and the engine of eco investment. We have last year acquired 442,000 square meters. A lot of this year was for offices. What you look for plans for 2018, we're going to acquire the same amount of square meters, but the majority will be for residential. So much more residential land is going to be acquired this year. Roughly 70% residential land and 30% office land. That is because we have a very stable land bank when it comes to offices, and we are also having a good land bank for residential, but we need to continue ramping that up as our business is growing so quickly in residential. Out of this 400,000, as you've seen in the earlier slides, we have already secured more between 50 to 60,000 square meters of it. We have 250,000 square meters already identified, and we're buying it at roughly at the same levels as we have acquired land historically. The construction market. The construction market in Poland is hot. Prices are going up. We see it not only for us, we see it for all the developers across the market. We also see that there is a lack of people on the market to work on our projects. What Echo is doing, we have put on a lot of new people internally. We're dividing it into more packages. We're going much more into industrialization. But we have still seen a price increase. But what we have seen is that we've been able to compensate the price increase of construction with a price increase in sales prices and yield compression in the other markets. So we still deliver at least the same profit level on our projects that we did historically. Because you will see here as well, if you read all reports from REAS and other markets in residential, but prices are increasing in our residential platform. In offices, we see a very steep yield compression, both in Warsaw and in the regional cities. And we have also been able to sign another 880 million zlotys of new construction contracts, and we are very, very, very close to the market. What's unique about us, we buy directly from the suppliers. We don't go via general contractors, that takes another 8 to 10%. We don't buy via chains we buy directly from the factory, which saves us another 8 to 10%. It really shows that we are much more closer to the producer of the material until we buy it to our site. And we can buy material and we can buy subcontractors differently. So this is really showing, this is our success factor, really if times are good or times are bad. If you remember my presentation 2 years ago, or 1 year ago, a little bit more, we decreased construction costs with 15%. So we really took a step back and showed that we have much lower construction costs than anybody else in the market. What we have seen now, we've seen increases of 5–6%. So we are really now, but we're still seeing increases on on sales prices with up to 8 to 10%. So we really are compensating the increases of construction prices by having increases of sales prices and yield compression in the office part.
Now we are going to talk about the financial results, and of course they are a result of the very good business performance, both from market perspective and from the perspective of execution and ability to deliver on our strategy. You can see that, if you compare quarter to quarter, obviously we have a huge growth in revenues that is mainly driven by the residential segment, and as Niklas explained, we have delivered over 500 units in Q4 2017. Our profit before tax in the Q4 was 3 times higher than a year ago, and it was also significantly higher for the entire year. So we can see that we are beating 2016 in 2017 by much better performance of our business. And you can notice that our net profit was not as high as a year ago, but because our profit before tax was higher this year, you easily understand that the reason for that was a different event, which was simply a release of deferred tax provision in 2016. So it was a non-cash item related to the one-off disposal of our yielding portfolio. So once again, our profit before tax is much higher than a year ago, and it's driven by a very good business performance. Our assets have grown, and I will explain, what are the main drivers, while our net debt remains low at around 26% of our balance sheet amount. If we start from the revenue, as I mentioned, residential revenue shows over 100% growth year on year, which is very strong, and clearly is the main driver of our bottom line increase. We see also some growth in the office part, which is mainly driven by the services related to the fit out and similar works, and we see a drop in retail, and that's not surprising because a year ago we still had shopping centers, 16 shopping centers that were disposed of, to EPP. So we are not going to have rental income from retail, in the future, because as our strategy assumes, we are selling our assets as soon as we can. So the lease revenues will be, are expected to be small. So let's look at the main profit drivers. So what, how we were making money and what were the main drivers in 2017. Clearly, a very important component was residential revenue, and residential margin, in a Q4 was 77 million out of 118 for the whole year. So as Niklas said, Q4 was extremely strong, and it delivered, not even the majority, but 75% almost of our margin for the whole year. If you look at the fair value impact of our projects, we earned over 230 million for the entire year, and only 8 million in the Q4 for a number of reasons. One of them was strengthening of zloty against euro, because just to remind you, our shopping centers, under construction, our office buildings are essentially or fundamentally euro assets. So with higher stronger zloty, the impact was smaller. But of course, this is already reversing, and euro goes higher in Q1 this year against zloty. Important factor was also revaluation and disposal of shares of EPP, which happened in first half of the year. And as Niklas mentioned, development fees in respect of the projects that we delivered to EPP, so extensions of Galaxy and Outlet. We also earned fees for development of this building, which was sold in 2016, but we continue to make money in 2017 on the services and earnouts that we are receiving. And we also showed a revaluation gain on Galeria Młociny. This project was acquired in June last year, but because of very successful leasing, very good progress of construction, and of course very good environment in terms of the yields, we are already able to show a revaluation gain on this project, which we believe, as Niklas explained, is going to be extremely successful. Let's look at the balance sheet, which I mentioned, has grown from 3.4 billion to almost 3.9 billion PLN. The main growth on asset side was in commercial and residential properties under construction. This is really what drives our future profits. And of course, that's why this part of balance sheet is growing. We also have much more cash, as it was mentioned. Year-end is usually a period when we sell projects, and for this and other reasons, our cash figure at the year-end was extremely strong, almost 700 million PLN, driving our net debt to around 26%. If you look at the liability side, we can see that, of course, our equity increased by the amount of the profit. Also, our debt increased mainly in long term because we issued in Q4 bonds to the public, and I will explain this situation in a second. Let's focus on the assets, and I think it's a very important part of our strategy to make sure that we sell assets early in the process, and then we manage, our liquidity position carefully. So I already mentioned a very high cash position. We have trade receivables and restricted cash. Restricted cash is mainly prepayments for apartments which are being released together with the progress of construction, and trade receivables are mainly in respect of projects sold, so they are generally expected to turn into cash this year, so in 2018. We have EPP shares that were valued at 243 million at the balance sheet date, and I will also, I would like to explain that if you look at the share performance, actually, currently the EPP share price increased very significantly over year-end number. So the performance of EPP share price is very good in Q1 2018. Our residential assets are showing very high levels of pre-sale. So actually they are being converted into cash over the project life, which is how it should be. So we also put it quite high on this circle of liquid assets, right? Because this is how it works. We start from the most liquid, which is cash, and to the least liquid, right? And so residential assets are actually because of their cash generation ability, they are high. We have plots for sale, and as Niklas also mentioned, we are as part of our focus on Poland and on particular types of projects, we are disposing of certain plots. We have disposed in 2017 of 2 plots outside of Poland. We still have 1, and then we come to commercial projects under construction. Many of them will be turned into cash this year. So it was already mentioned that we have under contract a number of of properties that will be sold actually in first half of this year. So this is Sagittarius, Westlink, Symmetries, and we also have projects that we started to put, on the market, and we expect to sell them later this year. But that was already covered by Niklas. We have also retail JVs, which are Młociny and Towarowa, and clearly Młociny is a project that we expect to complete next year. Towarowa is of course a bigger and a little bit long-term project, so that's why it's already on this part of the circle with as less liquid asset. The bonds I mentioned, before the liability part, and that we did issue, a lot of bonds in Q4 2017, and actually we plan to continue, that in 2018. In 2017, we issued, 300 million of bonds under the program addressed to individual investors, and that was extremely successful in 3 tranches. Each of the tranches, was sold very quickly. It took approximately 1 day to get subscriptions for amounts of 100 or 125 million PLN. And in the tranches issued in Q4 have 5-year maturity, which we believe is very adequate to to our needs. We also issued 305 million bonds to institutional investors on similar terms, but with 4-year maturity. In 2018, we started already a program. We filed with KNF a public offering document for 400 million program, and we would like to continue tapping this market of individual investors. So our plan would be to issue around 300 million bonds to individual investors and up to 150 million to institutions. So total is 450 against around 400 million of bonds that are to be redeemed in 2018. So our net debt position, in terms of the bonds issued, would only slightly increase compared to the balance sheet date. I would like to remind, or reiterate, what our dividend policy is. So as we did declare a year ago, we expect to dividend out 50 groszy per share out of 2017 profit payable in 2018. So that would be an ordinary dividend, and that would be compared to our profit amount. You can see that this is slightly below 70% of our profit. This is the rule we would like to keep for the future. So to distribute up to 70% of annual consolidated profit, and the remaining part obviously to be reinvested in our growth, because as we explained, we believe the business prospects are very good, and we need to expand our land bank, and this way to build our future base, the base for our future profits. This is of course a dividend policy in respect of profits. As you know, last year we also dividend out the amount that was generated by the disposal of the EPP shares. So this dividend policy is not addressing, of course, in these amounts, any amount distributed for any extraordinary asset disposals. This slide goes a little bit back to the times also when we had slightly different business model, and this is to remind you and to show you, the impact of this business model change. So until Q2 2016, when you can see a significant drop in NAV, we did own many, shopping centers and office buildings that were yielding, that were originally developed by Eco, but were kept on our balance sheet, since they were constructed without really an intent to be sold. In 2016, in Q2, we had this very big transaction of, disposal of this portfolio of around 20 assets the transaction value was above 1.2 billion euros, so it was around 5 billion PLN, and we did pay a one-off dividend at that time to our shareholders, and that resulted in a big drop of our NAV. But I would like to mention something else really. If you compare our NAV per share before this transaction and after to our share price, you can see that in the past, when we were a sort of a mixed entity with, being both investor and developer, Echo share price consistently traded below NAV per share. So we traded at a discount. After the disposal of this portfolio, after the dividend payout, we are continuing to trade at a premium. So we believe that the market appreciates the fact that we are more effective, that we turn capital faster, that we provide higher returns, and we are able to pay cash dividends, which was never the case in the past until we started to pay dividend in the context of the disposal of our yielding portfolio. We continue to work on the diversification of our shareholder base. I would like to remind you that our largest shareholder, Lisala, owns around 56% of the shares. We have two other large shareholders, being Polish pension funds. We have a free float of over 20%. And also, since last year, both Niklas and I, we do own shares of Echo. We continue to work on attracting investors from Poland and from outside of Poland. We had over 160 meetings with investors in different countries. You can see this on the map, not only in Europe, but we also went to USA to explain our business model and to attract investors, and we'll continue to do that in 2018.
As Echo is working a lot to be a value-based company, and we have today 75 construction sites ongoing. There's a lot of people going in and out of our construction sites every day. That's why we have a lot of people working with health and safety on our construction sites. We have training all our people, we're training all the subcontractors, we're making sure that everybody who comes into our construction site walks home safe at the end of the day. And this is really for showing that we have put in safety and health and safety people from UK to help us out with this. A lot of our projects get now rewarded for being much more safe than they were historically. This is a journey that we have started, that we're going to continue putting a lot of time and effort to making sure that everybody who goes into an Echo site comes home safe by the end of the day. We also put in a lot of compliance actions into organizations. We have 2 independent persons in our supervisory board. We have also launched an internal audit function. We have a whistleblower policy. We have trained and retrained all our people in code of conduct. So we continue really to working on this. And you also see that before we had a list of a lot of exemptions from the Warsaw Stock Exchange best practices. All of these issues have been closed down. So we are now fully compliant with all the rules and regulations from the Warsaw Stock Exchange.
Now it's time for questions. So if you have any questions, just let us know.
Thank you. Maciej Wiewiórski, Dom Maklerski Banku Ochrony Środowiska. Actually, 2 questions. First one would be, you gonna pre-sale or hand over 2,000 apartments in 2020? Because I'm not fully sure what you meant saying deliver to the market.
Our target is by 2020 to be able to hand over keys to 2,000 apartments.
Handovers, all right.
Yeah.
And you still own a large chunk of EPP shares, 250 million market value around. And my question is, when are you gonna dispose it? Because it's an asset put up for sale.
That's correct, but we are not commenting on the time of the disposal. We are happy with the returns of course, the share price is performing very well. There is a very strong dividend yield. But as you rightly noticed, we've made a year ago a decision, and that continues to be true. But we are not commenting on the timing.
Thank you.
Any other questions? If not, we have a few questions from those who are watching us online. So I will go through them. The first question is regards to the construction prices, if they will affect the profitability of our projects.
Like I described before, we have seen an increase of construction prices, and we're monitoring constantly. What we've seen also now, we've been able to close that gap by both getting higher office rents, but also getting lower yields. And in our residential business, we really see that we've been able to increase the prices at the same level as the construction cost has been increasing. So it's looking forward, it should not affect the targets that we're having on profitability of the different segments of the business. What we can see as of now, but I cannot say going forward what the prices will develop to.
There is a lot of interest in Towarowa 22, and the questions basically are about the milestones of the project, or what we're gonna do this year for the project.
This year we now put on a well-known international architect that is now working with really showing how we can turn this into 180,000 square meter scheme, but also showing how we can utilize all the areas around to make sure that we really deliver the flagship project we want to deliver. So this year is a lot about working on the project, working on the master plan, going forward, and how we can make sure that when we deliver this is going to be as fascinating and exciting for Warsaw as the Warsaw Brewery is today. And also by bringing in this really who has done this kind of project, both in abroad and both also in the market that they're doing a lot of fascinating projects in Manhattan and all over the world. By bringing in them, we really make sure this is a project that is going to be really a flagship project for Poland, and people will travel here to look at it.
The next question, the easy one about Libero, if we know the exact date of grand opening.
The grand opening will be in August this year, so that is confirmed. And we're also seeing now a big interest from tenants and really showing what we have done here by turning so much more from traditional retail to food and gastronomy retail.
And on residential, if we see a lot of demand from the institutional investors buying the residential units from our company, from our projects.
We don't sell to any institutional developer in the same way, as we are more now looking into a residential for rent platform and how that's going to be structured going forward. So in our resi for sale, there's no any big chunks sold out to institutional investors. That's sold to private persons. Then there's a difference between Warsaw and the regional cities, how much is sold to people that will rent it out in second hand to the market and how many who will live there permanently in the apartments.
And the last one from our online spectators is on margins in general on our project. What is the range of margins?
Right, as we said, I think many times, we are heading to achieve 30 to 40% profit on cost margin measured on project level, and looking at 2017 and 2018, we are consistent with that. Of course, there are projects that are below that range, but there are also many projects that overperform very highly. So it's, you need to look at the average, but and also what we target when we buy the projects. As Niklas explained, looking forward at the projects that we are starting, we see that we have higher assumptions for the construction costs, but we are also comfortable seeing yield compression for especially in the office part, and growing sales prices of residential. So we believe that we will be able to maintain our targeted profitability in the future. although this requires effort, but the market is currently very, very favorable.
I see the question from Cesare.
Hi, Cesare Bernotti, Haitong Bank. Actually, I wanted to ask you about the margin on the office activity. In 4Q, I suppose it was in the negative. It was below the watermark, and I suppose that was related to the fit-out works that you concluded in 4Q.
If you talk about Q4?
Yes, exactly.
Yeah, Q4.
The gross margin.
Right. Q4 was actually affected by a number of things. We didn't have many projects to be revalued. That's why the effect of stronger PLN was also visible, compared to the end of Q3. And you're right that we recognize costs of fit out and also costs of master leases, because you need to remember that that's one of the elements that is affecting, not shown as a cost, but actually is a decrease of our revenue. And another factor is that one of the transactions that we concluded in Q4 had actually a deferred payment element that will materialize only in 2018. So in fact, there was a deferred price element that affected the revaluation amount.
So basically, it's not like kind of structural problem with the fit-out works that they are like.
No,
the
profitability
is falling.
I think it's just that we didn't have a lot of projects that had this initial revaluation, and also we also sold only 2 projects, and as I said, one of them had a deferred price element. So that's why this amount of revaluation was particularly strong, but actually this creates a very good basis for 2018.
Okay, thank you.
And other questions here? I can't see, and I saw the last one from those who are online with us. That's the expected yield on Galeria Mociny.
Well, I think that's a very interesting question, of course. What we see is that, I don't want to answer this question directly, right? Because we are still before negotiations. But what we can see in respect of Warsaw, obviously, is that, it's very hard to buy anything in Warsaw. So we believe that if any of this type of assets is put on the market, right, we are convinced that we'll see a record-breaking yields. But there is no transactional evidence because there is simply no assets being traded of that quality. But when we talk to brokers, based on what is going on in the secondary market, where yields are already low, there is basically a consensus that this would be definitely a record-breaking yield. And I would like to leave it to your imagination what this could be, but we believe it could be really low in the current environment. That would be a really a very low number compared to what we have seen so far in this segment.
I have a question. It's, Przemysław Maciejuk from Żółkiewicz and Partners. What threats for the business do you see in the long run? Is it a lack of the land bank, good lands to buy in cities, or something else?
Right. Of course, we would like to turn threats into opportunities, right? Because whatever affects the whole market, right, I think we are fine with, because we believe that we have an excellent executional ability, which means that, we believe that our ability to compete will produce, very good results in any market. Of course, from time to time, you may have some cyclical elements that, again, everybody will be affected, which are clearly a threat, and nobody would like to see sudden changes in the macro environment. We have to admit that currently the, macro environment is very favorable, and there is also nothing in our segments, right, that, looks like a threat. These markets seem to be very balanced with very strong demand signals. So, there's nothing that we can, point our finger to and say, okay, we think this is like something that will become a problem in the near future. But of course, having said that, we are very conscious that, things from time to time may change in terms of macro. And that's why we also, want to run our balance sheet in a, I would say, quite conservative way, and also have the strategy that we pre-lease and pre-sell projects early, so we, minimize the risk of exit and any effect on our liquidity that can be caused by changing market environment. So I would like to, repeat that we don't see any short-term threats, but we are of course, working to be prepared to, also environment which is not as favorable as it is today. But, we keep our fingers crossed that it is as favorable as today, as long as possible. 2018, looks very good, and also 19. Of course, what is beyond that? It's more a macro question than we think, than a question related to our markets, which have very strong fundamentals and can work like that for many years.
I think also it's important to say, based on your question, we have a land bank that is very strong and also that is also valued at the booked value. So it's what we bought it at cost of our whole land banks. We see really good potentials going forward, doing a lot with the land bank that we have in our books, but also, like I showed in slides before, to acquire another 400,000 square meters of land. And coming back to your questions before about yields, when we look at yields, we're always being conservative looking at what we see today. So we have not priced in any good, what Maciej talked about Machini, we're still being conservative on the yields of Machini until we see going forward what the yields will be as we are closer to that date. And that is applying to all our projects. And that's also what you will see when we sell off project. In the end, we always release additional profits.
Just a question about the land bank. You said that you're pretty ambitious in terms of your plans for 2018, and I was seeing that in your report you pretty much upgraded the budgets for the costs and for the revenues for the projects you have in pipeline for 2019 and 20, right? So the margins there are pretty nice, also nicer than they were quarter ago. I was just wondering what your thoughts are on the land prices at the moment, and how do you see the margins which are available post 2020? Because you're pretty ambitious. Many developers told us that they are holding back from buying land, and you're pretty much want to focus on residential. So.
We don't like holding back. That's not our strategy. So it's, but looking back to your question is very relevant. If you look going into buying small, isolated residential plot, the prices are not at all competitive what we can buy for. Looking forward, where we buy more like we did with Vita in Krakow, where we buy mixed use versus a different function and many different functions within one function, we can really buy it at totally different prices and levels. Also, what we have done, we've been cautious of the also both increases in sales prices, but also increases in the construction prices, because they will follow in some way, because you cannot only isolate that construction prices will go up forever and their sales prices will never go up, because we've seen it already this year going up and we see it going forward as well. Most of the plots we're buying are bigger plots. We buy it about 3, 4, 5 hectares of plots that has a mixed use function. And looking forward for our strategy, we're looking into new segments to enter to really add on to our mixed use strategy. And what you will see is many of our competitors are now also releasing similar strategies where they're trying to go into different markets. And I think that's a way for everybody of us to go around the isolated high prices for buying individual land plots only for residential, because that is not something we're looking at today, because that will cannibalize on our profit. And also we see from the cities and from the inhabitants in the city, they really want to have these destination projects.
Do we have any other questions? Okay, then it looks like all questions were answered. Thank you very much for your being here. You are, of course, invited for a cup of coffee and informal discussions. And if you go on the page that are On our screen, you can see the online version of our 2017 report, which seems to be a little bit more friendly to read and use. Thank you very much, and see you in the conference on Q1.